I'm joined today by Robin Doumar, founder and managing partner of Park Square Capital. Robin is among the incredible investors sharing insights at the Private Credit Investment Forum today. Welcome, Robin. It's great to have you with us.
No, it's great to be here. Thank you.
Let's dive straight in. We're here on the 8th of May 2025. How are you positioning your portfolio in the current environment?
Our portfolio positioning for the current environment really hasn't changed. I think we continue to lend to stable and predictable, high-quality businesses supported by strong equity sponsors. We have historically avoided things like retail, consumer-facing businesses, things that are GDP-linked, automotive suppliers, transport companies, things of that nature. And while we expect, as we speak today, the tariff volatility to potentially impact a number of those more volatile sectors, for our portfolio and for what we're trying to do, those businesses that we tend to support have been, really not very impacted at all by this. And we continue to stick to our style of investing.
And how would you characterise the opportunity set today in Europe and how it contrasts with the US?
I think Europe today is particularly interesting relative to the U.S. While the U.S. market is a very broad and deep marketplace, clearly it's experiencing more headwind today as we speak, given the tariff volatility and the prospect that brings of a bit of a potentially inflationary environment. And in that kind of environment, it's harder for the Fed to ease rapidly. So it looks to us like the U.S. market is likely to experience some growth headwinds and potentially a higher interest rate environment than Europe. Europe does have more room to lower rates if there is a bit of a slowdown economically. I think the oil price decline has helped Europe pretty considerably. And the prospect of Germany spending a lot of money on defense and infrastructure, €1 trillion is a lot. And that, I think, has the potential to be really helpful to the broader European economy. And I think as a number of pundits talk about the end of U.S. exceptionalism, I wouldn't go that far, but I would say there definitely is more interest in diversifying away from 100% exposure to the U.S. or a really large exposure to the U.S. and tilting a bit more to Europe for some of the reasons that I've outlined.
And you've been doing this at Park Square for 20 years with success. How did you first work out what a good and bad credit look like?
Well, I had the great fortune of starting in the workout business at Goldman Sachs many years ago. And by definition, a lot of the business models that were my clients were very difficult. One might say terrible. And by getting exposure to those difficulties and understanding what businesses might be vulnerable in a downturn, that background proved to be very, very helpful in informing my view of what sorts of business models to avoid, because in many cases they've been my clients years ago.
Your loss rates are best in class. What do you attribute that to?
I think discipline. I think discipline, a very systematic approach, and strong credit picking skills at the core of this, which is, the overall credit market is not necessarily attractive, but elements within it are super attractive. And if we can pick the high quality, strong credits from within a broader market, which is not necessarily perfect, far from perfect, I think that's a really good strategy for success. It's credit picking, particularly in this environment, that we think is so important.
And with the flow of capital into the space, what advice can you provide to LPs to guard against missteps?
I would stick to experienced managers who have an excellent track record. There are a lot of them out there. And I'd focus a lot on alignment of the team. Is the team aligned with performance? And what are the key drivers of the people within the team? Are they focused on getting paid a lot of money at the end of the year? Are they focused on deployment of capital? Or are they investors focusing in first and foremost on performance? I think to me, that's the key question.
Robin, thank you. We'll leave it there and get back to the forum now. I really appreciate you sharing your expertise with us today and for being a part of Global Investment Institute's Private Credit Investment Forum.
Thank you so much for the opportunity. It's been a great pleasure.